Hey, what's going on, guys? Welcome to another video. In today's episode, I want to talk about gold and is it truly an ultimate investment, or is it something that's going to hold you back from growing your investments and just kind of all about. I know we've all heard of gold and silver and these types of assets, and I just wanted to talk about the difference and is it worth putting your money into those and if it's going to pay out in the long term. Without further ado, let's dive right into this one. So you've probably heard of Ray Dalio, and Ray Dalio is a guy that talks about gold being a super great investment. And in today's video, I kind of wanted to cover, is it worth investing in gold, how you should invest in gold, if you even should invest in gold, and just statistically speaking on how gold actually operates in your portfolio once you buy it, right? So first, I wanted to mention this is not investment advice and you should always consult a professional. I'm just a guy on YouTube. So if you have any questions, leave them down in the comments below and I can point you in the right direction. Or if you just want my personal experience, continue watching this video and hopefully you learn something new. So one of the first things I wanted to cover is the difference between a productive and an unproductive asset. So the first thing is we have to note that gold, even though it goes up in value over time, at least that's what we've seen throughout history, it's actually not a productive asset. And here is why. A productive asset, as Warren Buffett would say, is something like a piece of farmland where you purchase it and then crops grow on it. I mean, you have to water them. Of course, there's some effort that needs to go in there, but overall, they continuously give you a yield every single either quarter or year or growing cycle, whatever it may be. So let me give you some examples of other productive assets. We have farmland, right? That's a productive asset because it obviously grows crops and you can take them and you can sell them. And then with the profit, you can go and buy more farmland or whatever else you want to buy. Next is a dividend stock or dividend ETF, where it's actually going to pay you each quarter or each month or even each year, a certain percentage of their profits is going to go to you. Another productive asset is a business that can grow and, once you make money on that business, the business pays you money and then you can take that money and put it to work. Another one is ETFs. And if you don't know what an ETF is, it's pretty much like a mutual fund that grows over time. And a lot of those will have dividends that you can collect and then put back into the dividend ETF or other stocks. Another really productive asset is a real estate rental property, commercial property, if you believe in commercial real estate going up over time. Really, residential is something that I don't see going away because everyone needs housing. And so I think that that's something that you could invest into now. And over time, someone's going to pay you rental income to live there. Of course, you have to reinvest it back into the property. But over time, if you do the right things, you're going to make a profit and you can take that profit and again, reinvest it. Last but not least is investing in yourself, in your own knowledge, because that is actually the biggest and highest yielding asset you can have, because only you can start a business, only you can invest in ETFs, only you can do the research on all these things and make the decision to do and invest into these things. So investing in yourself is very good, and it is going to be the highest yielding asset. So now that you know what a productive asset is, let's talk about gold and how it's unproductive. Well, let's say you bought an ounce of gold today. Currently, an ounce of gold is about $2,100. So let's say you buy that right now, then you hold it for 10 years, and then it goes to $3,000, or maybe it goes to $4,000 an ounce, right? It's been sitting in your safe or stuffed underneath your mattress or at a bank or on an exchange. Regardless where your gold is, it's somewhere building dust. And when you pull it out 10 years later, you still have that 1 ounce of gold. So the idea is you hope that the price of gold continues to go up over time. And if it doesn't, then you didn't really grow any money. Now, historically, gold has gone up and up and up over long periods of times. So statistically, you're not going to miss out on some gains, but it's not producing anything. Like if you plant a piece of gold in the ground, it's not going to grow into more gold down the road. If anything, it's just going to deteriorate and then you might even lose it and you might not find it because an ounce of gold is very small. So don't do that. And of course, if you like assets that grow in value and pay you something, invest in producing assets versus non-producing assets. So next, I just wanted to compare gold and the S&P 500, which is just an index of top 500 stocks in the market, in the US market. So let's just compare the two. And if you would have invested pretty much the same amount of dollars 100 years ago into gold, what you would have today, and the same for the S&P 500. So I want to just run down the numbers, and I'm just going to show you some charts here. So the very first thing is with gold, you could have invested, in 1920, and you would have had to pay $254 for 1 ounce of gold back in 1920. And if you look at today's price of gold, and it's currently sitting at around 2,100 per that same ounce of gold. Now, if you are a math whiz, you probably would know that that is about a 9 times return in 100 years. And again, this hasn't paid any extra money. This is just what the ounce of gold is worth. So take that out and you can resell it, and that's all you have. And you obviously couldn't have invested in 1920. You would have had to have your parents or your grandparents or even your great-great-grandparents invest into gold, hold it on for you, and then pass it down. And of course, you can be the recipient of that. So let's say the same thing happened with the stock market, and we'll use the S&P 500 for a comparison. So the S&P 500 actually wasn't around in 1920s, so we're going to just say 1930 is where we'd start. And to buy the entire S&P 500, right, just to get that whole index in your portfolio, it would have costed you around $250, right? $250 for pretty much one share of the S&P 500. Again, mutual funds didn't exist back then. So let's fast forward into 2020. This is 90 years later, and you would have a total of $3,250 roughly, again, give or take a few bucks or a few $100. And if you think about it, again, if you're a math whiz, you'll already know that that's a 13x return. And I'm only talking about the actual value growth, right? So we already know that's better than gold over the history of 100 years. And in S&P 500's case, 90 years. It's already a better return by about 4 times, right? And if you think about it, the S&P 500 is a productive asset. So we haven't even included the dividends that you would have gotten over those 90 years of investing. And if you would have reinvested those dividends, now we're thinking, oh my goodness, if I would have invested, $250 in 1930, of course, you couldn't do that. It has to be your great-grandparents or something like that. But if you would have had the opportunity to, you would have had the 13x return plus the dividends. And if you decided, hey, I'm just going to let this write itself out and I'm just going to reinvest those dividends over time back into the S&P 500, now we're talking about a productive asset working for you. If that's the case, well, you would have hundreds of thousands, if not millions of dollars in your back pocket. And if you think about it, that's a lot better than buying gold. So hopefully you learned something new today. And if you have, please hit the like button. And if this is your first time to the channel, hit the subscribe down below, and then hit that notification bell as well, because that's going to notify you anytime I post a new video, and you'll be the first one to have an opportunity to see it. And if you have any cool ideas or anything you'd like to see in particular, feel free to leave it down in the comments below, and I'll most likely do a video on it if I find it interesting or if I find that it's going to bring other people some value. So hopefully you enjoyed this one, and without further ado, have a wonderful rest of your day. Peace out.